Hello and welcome to PropNX, the property podcast about all things related to the future of real estate. I'm delighted that you've joined me today. My name is Gavin Morgan, your host. If you'd like to know a little bit more about me, please check out www.propnx.com. That's PROPNX.com. Or drop me a line if you'd like to chat privately on gavinrmorgan@propnex.com. That's GAVINRMORGAN@propnex.com. Hey, Todd Lauchlan, what an absolute pleasure to have you on the PropNX podcast.
Thanks, Gav. It's fantastic to be here. Good to have a bit of a chat beforehand about the Rugby World Cup.
Indeed. I think that I suspect that conversation may actually end up having lasted longer than the podcast, but that's the way it's supposed to be. But
that's the way it should be, right?
Yeah, well, look, Todd, it's great to have an old friend and ex-colleague on the podcast, and I know you've now risen to a fantastic position with JLL as managing director of the New Zealand business. And if you wouldn't mind, could you maybe kick us off with just a little bit of an introduction to yourself?
Yeah, thanks, Gav. Sure. As you say, I'm with JLL. Started with them in the mid-90s in Wellington, and like most Kiwis, decided to do a bit of travel. Ended up in London, and then via Mike Holland, our another countryman, Irishman, Mike Holland, ended up working in the India business for 4 years. Saw that explode, start the explosive growth that it's been through. And 20 years ago that was. Did a stint up in Beijing. Then Trina, my wife, who's also from small town New Zealand, Hawke's Bay, got pregnant. So we moved back to New Zealand in 2005, did 18 months there, then offered an opportunity to get to the Middle East, did 5 years in the Middle East, working for a couple of developers up there, and then back to JLL to run the Indonesian business. And that was a 7-year stint. And 5 years ago, the opportunity came up to come home. So that's pretty much what I've been doing since. So yeah, I mean, that's a sort of I don't quite know how it ended up doing all those emerging markets, but yeah, nice to be home. Good for the kids as well, of course. So yeah, that's where I am.
And obviously not a bad spot to be watching some world-class rugby, as you mentioned earlier as well. But yeah, look, I mean, a ton of great experience there, and which I'm sure is incredibly helpful in that role you have now back home. Todd, I wanted to talk to you today about major investors in New Zealand. And not a topic that I know a lot about, so a lot of learning for me here. But can you talk to us a little bit initially about the investor landscape in New Zealand and who the biggest players in that market are?
Sure. Well, New Zealand's a relatively small country. I mean, just over 5 million people. Very transparent, open economy. It does rely a lot on trade and capital flows, and our real estate market has been operating very efficiently and well, I guess, for 30, 40 years, and it has attracted a lot of foreign capital. So examples would include GIC. So they have had partners with Goodman, but a big Australian or Australasian logistics player that's expanded globally. Also now more recently with Precinct, which is a local REIT, which has been very successful. Canadian, or CPPIB, which is the Canadian Pension Fund, and PSB, which are two groups that you might be aware of. And they've also invested in a significant diversified $1 billion portfolio here. So they've been active. And we've got, all of the, I guess, the usual suspects you would expect to see in the market. And we really are, I guess, an Australasian market town. I mean, a lot of the capital ends up in Sydney, Melbourne, potentially Brisbane, and then looks to Auckland. And then our other markets like Wellington and Christchurch. We've also got a large number of private investors, particularly the Singaporeans have been active over 35, 40 years. So, and continue to invest and in fact have businesses here. Office, hotel would be the two sectors that have been dominating. So, I mean, over 20 million Kiwi dollars, they call that, so 12, 13 million US dollars. Our hotel ownership is over 50% Southeast Asian, predominantly Singaporean. So, and it's an active market that has quite a high amount of liquidity. So we've got no capital gains tax, no land tax. So from a sort of ease of coming in and coming out, it's pretty good.
Yeah, it's very attractive. You don't find that
very attractive, and
don't find that in many jurisdictions.
Yeah, so I think I think there's a mindset to our market that foreign capital and foreign experience and foreign expertise and relationships is a positive thing, and that has been the case for decades, really. So, and we obviously benefit from a massive capital sources across the pond in Australia. Do have a number of pension funds, the Australian pension funds invested here as well, although they haven't been as active. I think they probably see their diversification away from this part of the world. Yeah. Whereas Singapore with GIC and we've previously had the Abu Dhabi Investment Authority, ADIA here as well, with joint ventures that have gone very, very well. So there's been plenty of capital coming and going over the years.
Interesting. You've mentioned a lot of big international players, and you've mentioned what sounds also like a very, very friendly environment for international capital in New Zealand. Domestically, does that make it difficult for local players to compete?
No, I mean, it's not really. I think you find that at the top end of town, the bigger assets range isn't a liquidity amongst the local REITs and investors, although there are plenty of properties in that category that are owned domestically, and most of those companies listed in the share market. So there's plenty of space to play for the domestic players, and there's a large syndicated market here that buys property for a long-term hold and distributes monthly or quarterly rental dividends and buys capital gain over a period of time, and that's been a feature of our market for decades as well.
Right,
and it's established, and I think particularly when the interest rates were very, very low, that was a very strong option for a number of our investors at the sort of retirement age, I guess, to look for a consistent income. They feel property, I think, is a bit of a, like most countries, people feel comfortable with the bricks and mortar approach, and we haven't had any overbuild in any of the sectors for a very, very long time, probably not since the late 80s. So we haven't had that sort of large vacancy, falling rent scenario really coming. Obviously, we've had cycles, but the demand, the occupancy levels are very, very high. I mean, the average REIT would have occupancies in over 98%, right through the cycle, and that's obviously been in the last 2 years post-COVID a pretty tough operating environment as the country's recovered from COVID.
Yeah, I mean that also sounds attractive, and there are not many markets that can claim to have offered pretty consistent returns from investments over a long period of time. It tends to chop and change a little bit, as we both know in most places. And the domestic market, just sticking with the domestic market again, Todd, are you seeing? You talked about syndication REITs and also individual investors. Much activity overseas from that New Zealand, that indigenous group. Or do they mostly stick to New Zealand, or do they partner with some of the international companies that come in investments in other places?
No, we haven't had too many, any really large REITs or syndicators, reach across Tasman or other parts of the world. We've had certainly a number of private investors that have,
right,
and successfully as well. So Robert Jones, for example, in Australia, particularly in Sydney, for decades, other privates that have done that. And I think they're very comfortable, very familiar. And the privates have also, I think, to other markets. But the syndicators, I think, driven by this debate, are very focused on the domestic market. The REITs, I think, have got a very similar base as well. So they typically stay. I think where we've seen exporters probably our sovereign super, and they've been quite active placing capital right across the world. So got a logistics play in Europe, investments into the US and diversification play, really getting away from
Yes.
that Pacific region which we're currently in, and they've performed.
And Todd, sorry,
very, very well.
that kind of mirrors. My understanding is the Australian supers have a similar strategy, isn't that correct? They're quite diversified around the world, in addition to obviously investing heavily in the domestic market.
That's correct, yeah. And I don't think the Australian super market's particularly invested in real estate as a percentage of their overall funds. I mean, their funds are sort of measured in the trillions, and
Yeah.
if you find them all, and it's a relatively low percentage, I think, in real estate. But you're right, they are definitely trying to diversify away from this part of the world.
Right, and tell me what sort of role. So here in New York, and look, when I was in Asia, and I'm hearing the same about Europe, there are many different regulations rightly being put in place in the near term that will determine or govern how investable buildings are based on how sustainable assets are, or how sustainable assets can be in the near term. Are you seeing similar rules and regulations in New Zealand, and are you seeing investors reacting to that?
Yeah, absolutely. I think we're about to see a phenomenal change in that space, and then we've got obviously an occupier base, particularly at the top end of town, that have net zero carbon targets.
Yes,
which will drive conversations around how they occupy office space and other real estate, of course. We've got, I guess, regulations and examples across the Tasman of how good Australia has been in that space, and how we need to catch up. And I think at a bipartisan level, at a government level, there's absolutely a view that we need to do more to reduce our carbon footprint. And that, I listened to a number of your podcasts, Gavin, and I think you've got experts there that talk really well around the need, and New Zealand is no different. In fact, if you think about it from an investor point of view and an occupier point of view, we've got the same parties, same stakeholders, right?
Yeah.
And we have a country, I think, that's very focused on sustainability, and mindset is very much around. So
well, I think a bit of a world leader, isn't that right? I mean, there's so much. There's New Zealand, and I know the private sector in New Zealand has been incredibly focused on sustainability. I think way back, probably even before it became the global issue, or the connected global issue that it is today. So there's quite some depth there in this space.
Yeah, there's absolutely depth. I think we probably haven't caught up regulatory-wise. I think Singapore and Australia have got made a lot of those regulations compulsory in the early to mid 2007, 2008. We've gone more of a voluntary route and relied on the private sector. And I think that's about to change, and that will be a catalyst for another evolution, which obviously JLL hopefully can bring its talents and skills and people to the table to try and support their clients as they go through that transition. And I think we'll see the capital base change to the reality around some of these buildings need to be repurposed or refurbished to meet those regulations, and some of the existing capital pools may need to sell to someone else to step in. And I think that's what the occupiers will do. So it'll drive that. But no, we're certainly in exciting times. We do have our grid. Our electricity grid is 95% renewable, predominantly hydro. So from a point of view of sustainable buildings, and particularly our point of view, it's very strong.
It's incredible. It's incredible. I don't think anywhere else is anywhere close to that.
So that's also driving a bit of a boom in the data center space, Gav. We didn't see coming. We assumed there would be demand, but it's exploded in the last 2 or 3 years, and we think it'll go again because generative AI driving a lot of the data center demand, and then obviously I think the thinking around the occupier base is that if the grid's 98% sustainable, it's a pretty good solution. So I think that's all ahead of us.
So Todd, speak to a couple of things, please, that highlight why New Zealand is a particularly investable place, or a place that you would want to base your organization in the Asia Pacific region.
I think the key, if you think about what an investor's looking, obviously we've got a very stable, transparent economy. Depending on who you talk to, one of the best places to do business in the world, you always rank in 2 or 3. We've got some cities and towns that are some of the best places to live. So I think that all goes pretty well. Obviously, we're not a big economy, so we need to be flexible. That provides a lot of comfort to most investors. I think you think about in terms of where the opportunities are. All those transitions to green will significant opportunities. The economy, I think, will bounce back strongly from COVID. I mean, there's a lot of immigration as well, Gav, that I think we're getting 30, 40, 50, 60,000 people every year net moving to New Zealand, which obviously provides opportunities in right across the economy, but particularly in the real estate space. And residential is a big one. I'm not sure I got your question 100% right there, Gav. What was you
no, you did. I mean, that was. You're talking about. I mean, I was asking you about what sectors, or where you think New Zealand is investable, but also from an occupier point of view, what industries do you think New Zealand is most attractive to, and why? So, where. Where would you be suggesting that office tenants are pointing to fill their space, and why are those industries best placed to look at New Zealand? As opposed to other places, or what are the advantages of being there?
Yeah, I mean, I think primarily the office market, probably unlike say Singapore, which might be, or India, where you have a whole outsourcing, drives the phenomenon. Yeah, I think it's primarily servicing a domestic demand, and it's a very diversified economy.
Yeah.
So we used to be heavily reliant on the primary sector, but now it's we've got a very diversified right across all sectors, really. So I think from a location point, probably the only companies set that we've got really seen growing explosively with we are seeing startups is that tech space. So we've got a lot of innovation, particularly agri-tech, as you can imagine, around the primary industries. That's been very, very strong. We've got movie studios and Peter Jackson, obviously with his Lord of the Rings. On that space has been a huge employer, and he continues to buy more real estate. He's now got a $350 million portfolio of property down in Wellington, and that's predominantly to service his own for his own businesses. So that I think what we're probably
dynamic
is,
and it's domestically focused and dynamic as you would expect in a big economy like that.
Yeah, and I think we also do benefit. As much as we don't like to give the Australians too much credit, we do benefit from a very strong economy over the year, and we've had what's known as a CER cluster that was put in place in the 80s and very connected. So from an Australian individual or a company, they can come and go as they please. They can live here, they can work here, they can invest here, they can own property here. Residential, commercial, whatever it might be. So we are now seeing, I think, a strong Australasian economy, which they continue to power ahead. I was listening to a podcast last night, Australian Financial Review, talking about them wanting to build 1.2 million houses over the next 10 years, try and address their housing needs. I mean, I think the biggest challenge we're going to have is talented people. It's just getting enough people here to be able to deliver on that we need to deliver on. And that, I think, is our biggest challenge.
Well, that sounds, Todd, I think that's a really positive note to end on. It sounds like, you have a growing market. As you said, you've got an adjacent, almost partner economy that is continuing to drive activity and demand into that market. You are importing lots of talent. I think a strong numbers on a relative basis compared to a lot of other nations, and stable. And you've talked about a stable investment market and great demand in residential and other sectors moving forward. So, Todd, are there any hotspots or areas that you feel that people should watch moving forward in New Zealand? Just to finish us up here.
Yeah, I think there's one area of the country that we're proud of, Gavin, and that's the Queenstown. It's an area that has been, I think, particularly post-pandemic, post-COVID, seeing a lot of growth, a lot of demand, a lot of immigration, a lot of people moving there, both domestically and from overseas. A lot of tourism, big rebound, right across from demand across the world, China, the US, particularly Australia. And I think the investment story is pretty compelling, particularly in that smaller CBD area where we've seen phenomenal rent growth and capital growth over an extended period, 15, 20 years of growth there. Some of the properties we've seen examples of capital gain of 11, 12% per annum compounded out for 15, 20 years, as well as a running rental yield. So I think, that's an example of a location that's unique, quite unique to the area. It's a great place, very safe, great place to travel to, as you know from your experience, Gavin, great place to visit. So
Indeed, yeah. I've had the pleasure, thankfully. And look, just chipping in, Todd, I mean, it's a beautiful, beautiful part of the world, but it's really quite dynamic in terms of what it offers a visitor. I mean, whether you just want to walk, hike, or experience, probably some of the best combinations of adventure sports on earth. I mean, it's all there within one of the most beautiful settings I've ever seen.
Yeah, you can jump off the ski field and then off the side of a bridge, and then if you're particularly brave, you might want to get 9 holes of golf. And the place is spectacular, but I think from an investment point, just seeing more and more demand down there. We're very active in that space, particularly in the hotel space, but right across the city. So I think we'll just be doing more and more with our clients down there.
Well, it's good to have that particular hotspot in mind as we conclude things for today's podcast. And really, Todd, it leaves it to me to thank you very much for joining us again on the PropNX podcast. Todd Lauchlan, Managing Director of JLL in New Zealand. Pleasure to have you on the show.
Thanks, Gavin. Really enjoyed it.
So that's a wrap. It just leaves it for me now to thank you very much for joining us today on the PropNX podcast. I hope that you'll be able to tune in again to a future show as the conversations develop. If you'd like to contact me, please drop me a note on GAVINMORGAN@PROPNX.com, or take a look on the website at www.propnx.com.